All right, welcome everybody to this Market Outlook 2021, the year of Gray Rhino, brought to you by Gananga Investment Bank and managed by our company Wealthfort. So let's just take a minute so that all of you can come into the room first. So how is everybody doing? If you are doing okay, type yes, okay, in the chat box so that we know that you are doing awesome. If you're doing okay, type yes in the chat box so we know that you are doing awesome. All right, excellent. So right now, I think the room is almost full. But today we also open out another channel, which is YouTube. So if you are streaming in from YouTube, yeah, this Shen Chu here from Wealthfort. And today we are very excited to be hosting this topic, Market Outlook 2021. Now, 1 year that the COVID-19 pandemic is here, how is the future hold for us? Okay, so today our speaker Derick Tan will tell us why 2021 will be the year for the Gray Rhino. So what exactly is Rhino? I guess Derick later will tell you why exactly it is Rhino. All right. So this webinar is brought to you by Kenanga Investment Bank in collaboration with Bursa Malaysia. So before we begin, just want to go through some disclaimer. Whatever we share on this webinar is only for educational purpose. In no way that we give any recommendation to buy or sell any securities that we mentioned in this webinar. So if you decide to make any investment decision, you do it at your own risk. All right, now allow me to introduce our speaker today. And Derick Tan has also spoken on Kenanga platform for many times, and his session is usually very receive overwhelming response. And today, due to popular demand, we are having him back in our Kenanga session. So thanks for joining us today, Derick.
Thank
So
you,
allow
Shane.
me to introduce him. Now, Derick Tan is the founder of Timing and You program, dedicated to raise awareness of the looming sovereign debt crisis, guiding individuals to survive and profit from the devastating financial crisis through the period of 2015 to 2022. Now, he has been an active trader and investor in the stock, commodities, currencies, bonds, and property markets since 1999. Now, apart from fundamental analysis and technical analysis, he is also a practitioner of the relatively unknown but amazingly accurate cycle analysis to improve the probability of winning in different investment asset classes. So if you have not heard about cycle analysis, then today you're in luck. Now, Derick has developed a proprietary three-dimensional timing and yield relative risk index RRI, which is probably the first of its kind in the world that combines cycle analysis, technical analysis, and fundamental analysis parameters to give a holistic risk to reward assessment of the US stock market. Derick is also the 2019 World Excellent Young Leader awarded by the prestigious Yazhou Zhoukan for his vision, courage, and influence to drive positive change and be a force for good in the world. So he has been featured in numerous media in Singapore, Malaysia, and Indonesia. So without further ado, let me hand over the time to Derick to tell you why this year is the year of Gray Rhino and how is 2020 like for us. Derick, over to you.
All right. Thank you, Shane. Good evening, ladies and gentlemen. Wow, I see 500 plus participants in this Zoom over here. So can you guys just say hello to me in the chat box? Just key in hi so that I can see you guys. Hello. Hi. Good to see you guys. So I think tonight is a session that I feel is very important. I really hope not only 500 of you guys, I think we are also live in the YouTube. Please take a piece of paper, a notebook and pen. Please write it down because whatever I'm going to share with you guys tonight is going to be very important. Also, please go and get your notebook and pen, all right? Also, with that, let me just go to my slides. And we'll kick off today's my sharing proper. So tonight is actually Market Outlook 2021, the year of the Gray Rhino. Yes. In fact, I'm starting to see signs of what I've been telling you guys for the last few years. In fact, this is my 4th year speaking. I'm very honored to speak for Kanaga for the last 4 years. This is my 4th year. Whatever I've been telling you guys about the sovereign debt crisis, the signs are here already, ladies and gentlemen. For example, the US bond yield has been spiking up. Do you all know that? If you don't know, don't worry. Later in the presentation, I'll show you guys more. All right, so let's move on. I don't need to introduce Rhea. So, but one thing very important, whatever I'm going to share tonight is only my personal view and opinion. All right, it's not a recommendation or advice. I cannot give any recommendation or advice. Neither can Shane. All right, so we are not going to be responsible for any of the action that you are going to take. Also, please take note of this disclaimer. All right. So now, I believe you guys attend a lot of webinars, so you listen to a lot of trainers or speakers. So different speakers, they have their own definition or time frame. Also, please allow me to share my definition of time frame so that you can better understand the material that I'm going to share with you guys later on. All right. So whenever I mention short term, it's anything less than 1 month. So it could be 2 weeks, 1 week, it could be a few days, or even intraday. That's what I meant by short term. Intermediate term is more than 1 month, less than 1 year. So it could be 5 months, 6 months, but less than 1 year, but more than 1 month. Long term is from 1 year to less than 10 years. Ultra long term is 10 years or more. So for tonight's presentation purpose, I'll concentrate on the short to intermediate term for the next 1 to 2 years. I'm seeing the next 1 or 2 years, that means 2021, 2022, it is going to be very chaotic. A lot of people thought that with the COVID vaccine, everything is going to turn into rosy picture. Unfortunately, ladies and gentlemen, I know Chinese New Year just over. I should be saying more good things, but I rather paint you guys the real picture. All right. Yes, economy data are bouncing up. Why? Because we have a very low base because of last year, because of COVID-19. But don't be too happy, ladies and gentlemen. Like what I mentioned earlier, COVID-19 has already done its damage. All right. At the later part of this presentation, I will share you guys. Yes, if you follow me for the last few years, I've been talking about US bull market, all these things, and we went through a melt up, all these things. Ladies and gentlemen, all good things have to come to an end. And I think this year is the year. Unfortunately, I to spoil everyone's mood, but I rather tell you the truth, based on my opinion. All right. So now, tonight, whatever I'm going to share you guys is something very interesting. As you guys know, out there in the market, there's something known as fundamental analysis made known by Warren Buffett. All right. There's technical analysis whereby you look at price chart to determine the entry and exit point, all this thing. So there is something called cycle analysis, or in short form CA. All right. This is where I specialize in. All right. What is CA? I think this is something very important because it allows me to see probably something is going to happen this year and next year. So what is CA, ladies and gentlemen? It's actually a field of studying, analyzing recurring pattern and repetition to forecast timing and turning point of different investment asset classes. I just want to share this, ladies and gentlemen. You may know fundamental analysis or FA, you may know TA, technical analysis, but please understand, these two deal with price. All right, but cycle analysis deal with timing. All right, it's only when you are able to combine FATA in terms of price analysis and CA in terms of cycle analysis, then you are able to look at the financial asset classes in more detail, or I say a three-dimensional view. As compared to FA and TA, you are just looking at a two-dimensional view. Also, whatever I'm going to share tonight is something very interesting, exciting, or let's get prepared for it. Also, tonight I'll be covering this FATA and the CA so that you guys have a better understanding what's going to come next, or which I think is very important. All right. So now, 2020, I think this is what we call the Black Swan event. We have the COVID-19. What is Black Swan event? That means not a lot of people expect it and it happened. Just like COVID, I know I didn't expect it to happen. And because of a lockdown, I've been stuck in Singapore for almost 1 year already, ladies and gentlemen. So this is what I meant by Black Swan. So that's 2020, but ladies and gentlemen, 2021, a lot of people say it is the year of the golden ox. All right. But to me, I think otherwise. I tend to think this is the year of the Gray Rhino. Then what is a Gray Rhino event? It's an event that is very likely to happen, but just that a lot of people close both their eyes and pretend not to see it coming. That's what we meant by Gray Rhino. And the trigger of this Gray Rhino event is what I call the SDC, which is sovereign debt crisis, GMC, which is a global monetary crisis. I know there are some of you guys who are new over here. I probably need to explain these two terms to you guys so that you guys have a better understanding what's going to come in the next 2 years. All right. So now, sovereign debt crisis is actually a bond bubble, ladies and gentlemen. Sovereign means government. Debt means bond. All right. We are seeing a bubble mainly in the government bonds or government bond. If you still don't realize, ladies and gentlemen, the global debt surged to an all-time high of 281 trillion in 2020. All right, if you look at the red circle over here, that is 355% of the GDP. Ladies and gentlemen, 355%. This bubble has grew even bigger in 2020 because of COVID-19. Or because of lockdown, government had to carry out stimulus plan. Also, one way is to borrow money or by issuing government bond. All right. This is another, if you still don't know how devastating it is, ladies and gentlemen, this is the global debt. This blue line here is actually for advanced economy. This red line here is actually for emerging market. This is a chart from the debt, global debt from 1880 to 2021. Let's look at the blue line. Can you see because of COVID-19 lockdown, the debt has been skyrocketing, even higher than the debt issued in World War II and World War I. You know, when we fight war, we need a lot of money, right? But can you imagine, because of COVID-19, the debt has skyrocketed. Not only in advanced so-called economy, also in emerging market, ladies and gentlemen. The government, they are piling on tons and tons of debt, ladies and gentlemen. This can't go on, ladies and gentlemen. I just want to say this. All right. Probably you guys are not familiar with bond market. So I need to explain a bit over here because I feel this is really important so that you can have a better understanding what's going to come next. All right. A very simple term. I try to explain very simply. Ladies and gentlemen, what's the relationship between bond price and bond yield? So when bond yield comes down, bond price will goes up. It's like a seesaw. On the other hand, when bond price comes down, bond yields will go up. Ladies and gentlemen, earlier I mentioned we are actually on the verge of the full implosion of the sovereign debt crisis, and there are signs already, ladies and gentlemen. From where? This is ETF in the US market. There's an iShares 7 to 10 year US Treasury bond ETF. That means they reflect the 7 to 10 year US Treasury. It's an ETF, bond ETF. Can you see since last year, August, this year 2020, this 2021, can you see bond prices collapse during the initial part of the COVID-19? Just like the stock market, during February, March last year. Bond prices collapsed. Then it recovered very strongly, just like the stock market. But since August last year, can you see it is slowly turning down? And even recently, it has gone into a waterfall decline. Can you see that? That means the 7 to 10 year US Treasury bond, they are collapsing. It's probably around a support around this two blue line over here, this support zone. My take is take note. Once this support zone is broken through, ladies and gentlemen, all hell will break loose, ladies and gentlemen. Bond market is going to collapse. Remember what I said earlier? Bond price and bond yield go in opposite direction. This is bond price. Next, I'm going to show you guys the US 10-year Treasury yield. Because the bond prices is coming down, that's why the yield is heading up. Can you see this was last year, the COVID-19, when it first exploded, or the bond yield came down, or then it stays low. But can you see since August last year, it has been creeping up, and for the last 1 month plus 2 months, it has been like going into a parabolic rise. Ladies and gentlemen, we are back to the so-called pre-COVID-19 level. Can you see? We are back to the pre-COVID-19 level. That's why I say, once this support level is taken out, or once this resistance level is taken out, ladies and gentlemen, all hell will break loose, ladies and gentlemen, and we will see sovereign debt crisis coming into a full implosion. Please take note. I'm very serious. This is something very serious. I know just after Chinese New Year, I should be saying about good things, but I rather tell you the truth. The global bond market is 10 times bigger than the global stock market. When the bubble bursts, the result is going to be devastating. I'm not joking, ladies and gentlemen. And signs are there already, as you can see. All right. So now the thing is this, but one thing I want to share with you guys is this. Even though the bond bubble bursts, we have printed so much money, right? Money is going to shift from why the bond prices is coming down, because they are selling enthusiasm. They are selling the bonds. That's why bond prices drop. So the capital that exit from the bond market got to go somewhere, right? It cannot disappear in the thin air. And we printed so much money, correct? So where do you think it'll go? That's why I can tell you the money will move into what? Into the largest market in the whole world. I mean, how should I say? Not the largest, one of the largest market in the whole world that can absorb this $1 trillion, which is the US stock market. That means money is going to shift from the public debt, which is a government bond, into private asset like what? Like US stock market. Like later I'll show you guys commodities. Ladies and gentlemen, commodity bull run has started. This is a chart of a CRB, or Commodity Research Bureau. It basically represents so-called the index for commodities. So can you see this is of course 2020 commodity prices also collapsed. Remember last year April, WTI oil even dropped to the lower 650. But can you see the strong recovery of the commodity prices? And it has even broken above this downtrending line. Look at the strong recovery. That's why I can tell, ladies and gentlemen, we are going through a commodity bull run. All right, inflation is coming back. And when inflation is coming back, interest rate has to go up, ladies and gentlemen. As inflation go into very high level, Federal Reserve has no choice to increase interest rate. Please take note, Federal Reserve can only influence short-term interest rate, 1 month, 2 months, 3 months. They cannot influence 10, 20 years. That's why you see all the bond prices is coming down, because longer term interest rate, like this, the US 10-year treasury rate, is not, it cannot be controlled by the Federal Reserve. They can try to influence it by buying all the bonds. But ultimately, ladies and gentlemen, free market is going to decide the long-term interest rate. And this time around, free market already has its say. They are already selling the bond already. Also, Federal Reserve, they can keep interest rate very low, but ladies and gentlemen, later on, they will be forced. This time around, the commodity bull run, I can tell you, it's not because of an increase in demand. Because we are still in a lockdown. How can we have so much increase in demand? It's because of a shortage of supply that's caused by all this lockdown. Or we should be seeing higher inflation, higher food prices, all these things. And no choice. Later on, I'm looking at second half of this year, Federal Reserve will be forced to increase interest rate. This is my view. All right. So I've touched on the so-called the SDC already, the sovereign debt crisis. Now, clearly, I'm going to touch on the global monetary crisis, which is GMC. Ladies and gentlemen, think about it. The government, they have been borrowing money so that they can even hand cash right into the hand of their citizen. As we are speaking now, the US is contemplating 1.9 US trillion of stimulus plan for the COVID-19. A lot of money has been printed. But do you think, seriously, I think not only Federal Reserve, ECB, a lot of central, they are printing, but do you think they can keep on print and print and print and print? I don't think so, man, ladies and gentlemen. All right, a time will come. If it's so easy, we can just print our money away to solve all this problem. Then we don't need to do anything. All of us don't need to run business already. Everyone sit down there and wait for the central bank to print money. But global economy doesn't work this way. We still need to produce goods and services. You understand what I'm saying? Also, ladies and gentlemen, I can tell you this SDC, sovereign debt crisis, and GMC, global monetary crisis, is reflecting a collapse in the confidence in the government. All right, that's what we are seeing. And it's going to be devastating. Why? Because it's coming already. And I will just show you the signs are there already. And I see the full implosion of the SDC and GMC in 2021 and 2022. Then how is it going to impact the stock market or even the commodity market or even currency market? Later I will share you guys. Also, this is a background we need to understand. SDC and GMC is coming. Watch out for this support in the US 10-year bond. Or if the US 10-year, you go above this level, ladies and gentlemen, which is about 1.5. I don't think it's going to just shoot through. I got a feeling it probably will pull back a bit. Then later on, you'll just, as the sovereign debt crisis implode further, the US 10-year treasury will then go higher from there. Also, this is my view. All right. Another thing, before I go into where I think the stock market or even commodity market is going to head, let me show you, please copy this down. I think this is very important. This black line, solid line here represent the bond market. This dotted line here represent the stock market. This thinner black line here represent the commodity market. So as we can see, bond market tends to peak before the stock market, which tends to peak ahead of the commodity market. On the other hand, can you see bond market bottom up ahead of the stock market, which bottom up ahead of the commodity market? This is the trend. All right. One thing I want to say here is there's no time frame between the peak of the bond market and the stock market, or the time frame between the stock market and the commodity market. There's no time frame. It varies based on the economy condition of then. But I want to show you guys bond market always lead the stock market. Stock market always leads the commodity market. So as I showed you guys earlier, there are signs that the bond market is starting to break down already, right? That means the next to break down will be the stock market. So now let me just share you guys where I think the stock market, especially the US stock market, will be heading. Because I think when the US stock market sneeze, the whole world will catch the cold. Also, that's why it's important to understand where the US stock market is heading. All right. So now let's take a look. This is S&P 500, one of the major US indexes. This is since 1999 until 2021. Also, can you see we have gone through a bear market here. This was because of a Nasdaq bubble in year 2000. Then we went through a bull market. So this is what we meant by one cycle of bull and bear. Then this was the 2008 global financial crisis, a bear market. S&P collapsed by 50%. This was due to the collapse of the Lehman Brothers or the subprime crisis. At the peak, it was the Lehman Brothers. All right. Then we went through a bull market for the last 12 years since 2009. Ladies and gentlemen, this is not a bear market. This was the COVID-19. COVID, I always say last year, I probably am the only one who keep on saying, this is not a bear market. This is 2020. This is probably just a deep correction because of a health crisis. That's why can you see how strongly it rebounded after the collapse? All right, so to me, we have been going through a bull market for the last 12 years since 2009. So ladies and gentlemen, cycle analysis, bear, bull, bear, bull. So after bull, what do you think is coming next? Can you key in the chat box? Bear, bull, bear, bull. After bull, what is coming next? Can you all key in the chat box? Let me take a look. What do you think is coming next? Yeah, a lot of you guys put it right. It's actually a bear market is coming already, correct? On this bull, I just want to let you guys know, this bull is really very old already. All right. How did it manage to stay so long? Because all the QE and the Fed, the central bank keep the interest rate low with so much money flooding the market. One of the places you'll go is the US stock market. That's why it keep on going up. All right. But I always say every party has to come to an end. All right. And I think the party is going to come to an end in the second half of this year. Not yet. The bear market, I don't think is going to happen soon, but it's going to happen in the second half of this year. That means June onwards. All right. Also, do think about that. So now, what is going to happen in the short term is this, ladies and gentlemen. Now, I'm going to show you guys my proprietary cycle chart. Remember, I want to say this again. Cycle analysis is about timing and turning point. So with my cycle chart, I can actually do forecast of the timing and turning point. For this case, is the down zone. Or probably some of you guys is the first time you look at my cycle chart, so I need to explain this to you guys. I want to say this. This is not a price chart. This is not a price chart. This is a cycle chart. Crunch on the 2nd of March, about 2 days ago. That means I take historical decades, hundreds of years of down zone data, plus a future market data of down zone. I put it together, billions of data points. I put it into a software. It does a crunching of 45 minutes. In the end, it will produce this red line, which is a cycle chart. All right. It does not have y-axis. It only has x-axis. So when we see March 01 means 1st of March, this 1st of April, 1st of May, 1st of June, that means this is for the month of March, April, May, all the way until September. Can you see? Cycle analysis allow me to do forecast. That's why I can forecast until September. So what is this cycle chart is telling me now? Is we are going to have a turning point probably around early May. Can you see? Remember, cycle analysis is about timing and turning point. So we are seeing a turning point around early May before the next major turning point here in around September. Let's don't go too far. Let's come back here. When I project this cycle information onto the price chart of down zone, ladies and gentlemen, it's telling me that this few days, I think the US market has been red, right? All right. So the thing is, this chart of down zone, can you see I've drawn a blue support uptrending line? So now down zone is being supported at this blue uptrending support line, and is a 50-day moving average. This line, blue line here, is actually the 50-day moving average. I do see that because of the cycle chart, when I impose this so-called cycle data onto the price chart of down zone, my take is this: we may have a chance for down zone to break below this 50-day moving, this cluster of support here, and probably go a bit lower to test this support around 29,200 and 29,800. There's a possibility. Or we may see that until probably around early May. All right. So what I see is this, ladies and gentlemen. Also, if this support is taken out, we may see down zone hit a bit lower to around this support zone of 29,200 and 29,800. Then it bounce up, or it may just hover around here until probably early May before it goes up. All my take is this: bull market is not over yet, but we're probably going to see a correction. In fact, we are in a correction. I hope it can be a bit deeper of a correction. Then it can shake up the wick holder. In fact, down zone is still doing quite all right. The damage, I can tell you, is done is in NASDAQ. This NASDAQ, you know, a lot of technology stock has been suffering. All the Facebook, Amazon, Tesla, all has been hammered left, right, center, right? So can you see? Last night, NASDAQ also dropped a lot. If you know about chart pattern in technical analysis, we probably may have a left shoulder, head, and maybe a right shoulder. So if going forward, if this blue support line is going to be broken, ladies and gentlemen, we may see NASDAQ heading lower to probably 1250, or from 1200 to 1250 around here. But it's not going to collapse. Just like down zone is not going to collapse yet. The support zone is here and here. A correction probably will be good, and based on cycle analysis, it may happen. This correction may happen till maybe early May. All right. So hopefully a deeper correction. If not, it may just be some consolidation around here before probably early May, it will turn up and go even higher for the general US market indexes. That's why I want to say short term, short to intermediate term, probably correction or consolidation. But after that, we are going to continue with the melt up, ladies and gentlemen. This melt up, we will see Dow Zone head to 34,000. This is my forecast. Dow Zone heading to 34,000, S&P 500 to 4,000, Nasdaq to 15,000 before this aging US bull market is finally over. All right. And based on what I see on the cycle chart, the next turning point probably is here, August, September. That's why I say this bull market, after the correction is over, we probably see the melt up continue, and I'm seeing the bull market probably end in the second half of the year, towards maybe the end of third quarter or fourth quarter. This is what I see as of now. I have to let you guys know this cycle chart is updated per month. This is what I show you all based on the latest data that I crunch. Also, do take note, this cycle chart got expiry date only for 1 month until end of this month. Then next month, I will crunch again with the latest data. Then the cycle chart may be different already. But this turning point in May, it has been, I've seen this for quite a long period of time. So let's watch out for May, but be prepared. The bear market probably should be in the second half of the year. All right. When? Then your question will be, Derick, still got melt up. Then when the bear market is coming? I think that's a lot of people's question, right? And now I'm going to answer this question. When bear market will come, based on my definition is, we need to see a 20% decline from the top of the US indexes. For example, Dow Jones or S&P or Nasdaq or even Russell 2000, a 20% decline from the top to the bottom. What do I mean by that? Let's say assuming Dow Jones is 1,000, it dropped 20%, that means it dropped to 800 points, a 20% drop. Or we need to see a 20% drop, plus we need to see a significant macro deterioration. When these two criteria are satisfied, then I will say we are in a bear market and we'll see a much bigger decline, possibly 30% or 40% or 50% or more. Also, it needs to satisfy these two criteria. Then you say, Derick, this one I know, drop 20%. But how do I know whether there's a significant macro deterioration? This is where my proprietary timing and yield relative risk index will come into picture. In short form, it's called RI. All right. This RI is a proprietary tool of mine, which I combine TA, FA, and CA. All right, to come up with this two RI. So this is my latest February RI. My RI is actually this black line over here. All right, it's stretched from 1999 until 2021 for the last 22 years. All right, basically it has accompanied me the data for the last 22 years because I'm in the market for the last 22 years. All right, so green color means in technical term, that means it's extremely oversold. Then we have yellow zone, orange zone, and red zone. Red zone means danger. That means extremely overbought. It's like driving a car. You see green light, you should step on your accelerator and go, right? Same thing. When my RI is at the green zone, that means the stocks in terms of valuation is very cheap, is oversold. We should be entering to buy. But when the stock, when the line is in the red zone, or that means in the so-called the danger zone, or we should not be aggressively buying stock. Or I want to say this, my RI represent the risk level of the US stock market, not commodity, not currency, not bond market, not anything else. It's specifically for US stock market. I can tell you guys, ladies and gentlemen, can you see this red line over here? This is a very critical 60% red line is very important. And there's this blue 30% line. As of now, my RI figure is 63.28, slightly above 60. So what I meant when I say there's a significant macro deterioration means when my RI starts to break below this 60% or this red color line, that means we will have a significant macro deterioration. Ladies and gentlemen, don't see that it's just a simple black line over here. Within it, I have 14 major TA, FA, and CA indicators. Then within them, there are 47 sub-indicators. I look at oil price. I look at the US 10-year minus 3-month treasury yield. Or I look at a lot of factors. I look at the stock market cycle. There's a 30-month fixed stock market cycle. All this, I look at the technical part as well. I look at the high yield bond, the relationship between high yield bond and the US Treasury bond, all this, all together 47 sub-indicators. So I pump in billions of data points to do the crunching. And so this black line is a result of AI technology as well as neural net technology. Also, ladies and gentlemen, so we are at 63.28. What does it mean? Let me overlay this RI against S&P 500, ladies and gentlemen. Remember, I say a bear market will come when we see a 20% drop as well as a significant macro deterioration. That means break below the 60% mark. Let me give you an example. Can you see my RI? This is in year 2000. It went to a red zone, extremely oversold. Then it came down. Can you see it break below the 60% of the red color line? At the same time, can you see S&P drop from the top to bottom 20%? Can you see drop 20%? RI break below red support line. Because of that, S&P collapsed 50%. Then we went through a bull market. Then can you see over here, my R line break below 60% mark? One criteria satisfied. Second criteria, S&P satisfied 20% drop. As a result, we went into a bear market. S&P collapsed by 50%. Then we went through a bull market. Can you see my RI break below red color line also? But can you see S&P did not collapse 20%? That's why after I think it collapsed, it corrected about 15%. Then after that, Donald Trump became the president then because of a tax cut, all this stuff that he did, US stock market continued to ride the trend up. And over here, I did not call for a bear market. I say it was a deep correction. Why? Because look at our RI. Even though S&P dropped, I think 30-40%, more than 20%, my RI did not break this red color line here. But one thing I want to point out to you guys is this. Can you see my RI line has been declining for the last half a year? It is showing a negative divergence. Can you see S&P has been going up? This is a monthly chart, has been going up, but my RI has been coming down. I'm already observing a negative divergence already. Also, probably going forward, we may see RI break below this 60% mark, like over here like that. And if later on, as S&P or Dow Zone or NASDAQ or even Russell 2000 collapse 20%, together with the break of this red color line, then ladies and gentlemen, then I will call for a bear market, which I think is going to happen in the second half of this year. And it has not broken the red color line yet, so don't worry. But one thing I want to share with you guys is this, very interesting. Can you see the RR line goes up, red zone just come down, goes up to red zone, then come down. Can you see since the bull market started, it has been going up, then come down, then it has been ding ding dong dong between the red color zone and the orange color zone for the last probably 3 years. All these are the result of what the Federal Reserve, the central bank printing so much money, keeping the interest rate very low. With so much money out there in the market, it's no wonder all this private asset is going up like US stock market. Also, do take note, ladies and gentlemen, it's close. My RI is close to the red color line, but we have not seen a 20% drop. I think to see both of these criteria to satisfy, 20% drop and fall below the 60% mark, I believe should be in the second half of this year. When that happens, then I will probably call for a bear market then. I think after today, I still have a webinar with Kanaga, probably in the second half of the year. So don't worry. When I come back then, I will show you guys when whether the RI has break below 60% mark. And if it has collapsed 20%, then probably we are going to a bear market already. But meanwhile, ladies and gentlemen, or just weather through this correction, all right, then enjoy the melt up for Dow Zone 34,000, S&P 4,000, and Nasdaq 15,000 before the so-called the final arrival of the bear market after 12 long years. I think should be this year already. If stretch a bit, will be next year. But I think more probably will be second half of this year. Also, let's get prepared, all right? Just to let you guys know, this RI is my proprietary chart, can only be found in Timing and You, but it's okay, don't worry, because I always give a webinar. I'm very honored to be invited by Kanaga to give webinar to you guys. So don't worry, whenever I'm in a webinar with you guys, I will share about my RI. So now, so with that, I spoke about the stock market. So next, I'm going to share about commodity market. Also, in the short to intermediate term, this is the cycle chart. Okay, before I go on, I just want to say this. Remember earlier I mentioned, all the data is already shown. The commodity has a so-called rebound very strongly based on the CRB. Can you see? And this commodity bull run, I can tell you based on my cycle analysis research, is going to run till 2024. That means that after bond market, remember, probably then stock market will peak. The latest will then followed by commodity peak, which I see is around 2024. That's why I can tell you inflation is coming back, commodity prices coming back, inflation is coming back. Federal Reserve or the central bank, no choice, they have to increase interest rate. They will be forced to, ladies and gentlemen. But if you ask me, I don't think we will go into hyperinflation. That's not likely, but probably a stagflation. That means the economy not doing well, but we're going to have inflation. That's what we call stagflation. All right. So now let's come back. Commodity. I think a commodity that a lot of people very interested in this commodity is called gold. But generally, I just want to say this, commodity is going to have a bull run until 2024. In a short to intermediate term, this is a cycle chart for gold. For gold, we probably will see a turning point towards end of March. Can you see? Before the next turning point in probably early or middle of July. Let's focus here, ladies and gentlemen. If there's a turning point around end of March, okay, I'm going to show you live how I analyze. Probably let's go to a price chart of gold. I already show you the cycle information, right? Based on the cycle chart. So allow me to share about gold, which I think a lot of people are very excited. Interested, not excited. All right. Can you see gold price has been coming down? Let me give you all a longer view, probably 10 years. Let's look at gold price. Gold price reached a high of about 1923 in 2011. Then it came down. And especially last year, it has a good run until August last year, reached a high of 2089. Then since August last year, it has been turning down. Let me show you August last year. So probably let's look at 2 years. So can you see August 2020, since a high of 2089, it has been coming down. Can you see, right? Let me zoom in a bit more. 1 year. Then let's draw some lines. This is the resistance over here, which is 2089. What I see of gold is this. Let me draw this. There's a resistance line here. Let me draw another channel line so that y'all can better see better. Y'all see anything? Hey, first, just to make sure, Shane, we are looking at my price chart, right?
Yes, correct. We're looking
Just
at
to make
your
sure.
stock charts.
Okay. So can you see? Based on this channel line, we are at the support here, and there's a horizontal support line. So I'm looking at gold price may be supported around here. And remember, the cycle chart information is telling me there's a turning point in end March. There's a turning point. So my take is this. My take is this. Let's go back to the price chart. I don't expect the gold price to deep to 1,600, 1,500 come down, but I do think that probably a support may be near already. And then it will rebound from there. All right. And going forward, like what I mentioned, we are going through a commodity bull run. I'm expecting the gold price to go higher, even so-called overtake this 2089, this August last year of the high of 2089. So I'm not too pessimistic about gold. The downside may not be a lot. And based on cycle chart, we may be seeing a turning point probably around end of March. All right. So this is for gold. This for gold. Let me very quickly cover silver. Because a lot of people say probably gold too expensive. Then let's look at silver to see what kind of opportunity we have. So this is a cycle chart of silver. This cycle chart also just crunched 2 days ago. Can you see silver? We are also seeing a turning point probably around end of March, April period. Can you see? Then we'll see a directional change until maybe end of August. So we are seeing a turning point in silver, probably March, April period as well. When I project this so-called cycle information onto silver price, let's take a look. Silver. Silver has been reacting much better than gold. Gold has been sliding down, right? Silver still down there. Didn't drop a lot. But let me just show you a 10-year view of silver. This is a 10-year view. Okay, probably y'all cannot see clearly. Let me just zoom out a bit more. Probably 2000. Maybe let's go back to year 2000. Then now y'all can see silver hit a high of $50 in 2011. Then it came down and it has gone up. It's still far away from the $50 high here. Can you see? Also, ladies and gentlemen, so with this information, let me go back to the price chart of silver. Can you all see silver probably found a support at this level already. That's why it came down from about $30. August last year, it came down, find support around 22, it bounced up. So around 22 is a very strong support. Let me zoom in even further. Let's say 2 year. Also, it has been faring much better than gold, correct? As you all can see, 2 year may be a bit long. Let me go 1 year. Let me draw some lines. Can you all see? Silver seems to have a support around this level. It touched this, it goes up, touch this, goes up. Now it's back to here. It is at this so-called blue uptrending support line. Remember, just now I showed you guys the turning point probably is end of this month or next month, right? So probably we may be seeing silver just have one more deep down to probably to this low here, which is where is 200-day moving average is. For this case is about $24. We may just one more dip, but after that, we should see silver price going higher. Going forward, because of a commodity bull run, I do think that silver price is going to clear this $30 high over here and go even higher. But probably we may see, I don't think silver will run anytime soon, probably hover a bit or even one more leg down. A good support is around 24 before it go higher, probably end of this month or early next month before rebounding and goes up from there to challenge this $30 high over here. All right, so this is what I see of gold and silver, ladies and gentlemen. Also, I just want to say this. Please allow me to go back to my slides. All right, so we are going through a commodity bull run. Gold, silver has been not too firm, but we can see oil price has been going up. Now it's about, I'm talking about WTI, is about $60+. All right, so, but I'm seeing oil price going higher than $60, probably to $75. That's what I see. All right, so ladies and gentlemen, just to conclude before we go into Q&A, I just want to share you guys this. Because of the signs of the breakdown of the bond market, remember I mentioned bond market is much, much bigger than the stock market, 10 times bigger in fact. So as money move out from the bond market, money will not disappear. Where will they go? it will go into US stock market. That's why I say we are going to, after this correction, we are going to see a continued melt up of the US stock market. So if US stock market continue to melt up, I don't think Malaysia market will collapse. Not likely. Not likely. But is it going through a melt up like US market? I don't think so. The main attention will be in the whole world will be the US stock market. So we'll have a melt up because of capital flow from bond market into a US stock market and the capital flow into commodity, pushing commodity prices even higher. That means there will be capital flow from the public debt, which is a bond market, to private asset like what? Like US stocks, like commodity, and like what? Private assets like what? That's why nowadays you all see Bitcoin and Ethereum, all the cryptocurrency run, right? Yeah. It's because we are seeing a gradual collapse in the confidence in the government. That's why people are putting money in private assets, like stocks, like commodity, like cryptocurrency. All right. I think so. With that, I give you guys a outlook of what I see. All right. So probably now we can go into some Q&A. I rather we go through Q&A so that I can answer your question directly. Also with this, probably I'll pass the time back to Shane so that we see if there's any question that I can help to answer. Back to you, Shane.
Yeah, thank you so much, Derick, for your insightful session and share your perspective where the market is heading for different asset classes such as bond, equity, and also commodities market. So if any question to ask Derick, please type in the Zoom Q&A box, okay, not the chat box. Okay, I repeat, please type in the Q&A box, not the chat box, because we have a full house crowd today. So all of you typing in chat, right? It will I can't be able to see your messages.
Yeah.
So type in the Q&A box. For those of you who are streaming in from YouTube, just type your question in the live chat. So let me peek. All right. So I get the first question from Peter.
Yes.
The question is, since government debts are so high and interest rates are low, some people think the US government will try to suppress the interest rate. So will the Fed do the yield curve control by buying up bonds and fighting against the free market? What is your view, Derick?
I think I mentioned this earlier. I already mentioned is Federal Reserve can only control or influence a short-term interest rate. They cannot control the long-term. Because of that, ladies and gentlemen, that's why we are seeing the US 10-year Treasury yield going up, and this ETF, which represents the 7 to 10-year Treasury bond ETF, coming down. Let me show you even longer US Treasury bond. Then you'll understand what I'm trying to say. There's a ETF called TLT. This is actually the iShare 20 plus year treasury. 20 year, no? So it's a longer term. Can you see it's also collapsing? Let me go to, let's say, 2 year. This COVID-19, this 20-year bond ETF also collapsed. Then it rebounded. Can you see? But since August last year, can you see it has came down and even went through a waterfall collapse? Ladies and gentlemen, can you all see this? Watch this carefully. It is as this COVID-19 low. I tell you, once it break this, ladies and gentlemen, it's coming down. So I can tell you, Federal Reserve can only influence short term, 1 month, 2 months, 3 months. They cannot influence long term because long term is so-called influenced by the free market. There's only so much Federal Reserve can do. You understand? And with the inflation coming back, no, we gotta understand. Federal Reserve, they has two mandate. First mandate, so-called maximize employment rate. That means they need to keep unemployment rate low. Second mandate, or they have to maintain a stable a price level or inflation rate, which they always keep on saying is 2%. But after printing so much money, after cutting the interest rate to zero, they keep on using the same excuse. Hey, the inflation never hit 2%. Recently, Jerome Powell even came out. Even hit 2%, don't worry. We will still do stimulus. He mentioned this. But I just want to say this, there's only so much he can do. Later on, he will be forced by the free market. Like what I say, he cannot keep on print already, because later on market don't buy this anymore. We are seeing the collapse in the so-called in the government and the central banks. Also, with inflation coming back, I can tell you interest rate is going to turn up, which I see is going to the second half of this year. Inflation is coming back. I already told you all, I showed you just now, CRB. The commodity prices is turning up. Inflation is coming back. Also, naturally, interest rate will turn up. Also, this is my take to the question. So I hope I've answered that question. Back to you, Shane.
All right. Now, just now you forecast that the bond market will first implode, first, and then the money will flow from the bond to the stock market, causing it to have a melt up. And then you forecast that towards the end of the year that the market will also crash again. So what will cause the stock market to crash?
Sovereign debt crisis and the global monetary crisis. That's what going to cause the finally the thing to give way, the stock market to give way, SDC and GMC, which I mentioned earlier. Yeah.
All right. So let's go to the third question, which is just now you mentioned that the US bond yield and also the bond. The question by the CLT is that you see recently the US bond yields have been spiking up, so causing the stock market to drop. So why is it drop? Shouldn't it be going up because the people have been selling bond? They should flow back to the stock, and why the stock market drop? So that's his question.
Okay. This is a very good question. This is the US 20-year bond, right? It has been coming down since August last year. Hey, y'all can look at my price chart, right?
Yes.
Okay. Let me put against the, let's say S&P 500. Let's take a look. Let's say I put S&P 500 as blue color line, so easier for us to see. I remove all the moving average so that you all will not get confused. Let me remove all this. So can you see this blue line is actually the S&P 500. And this black color is actually the US 20 plus year treasury bond ETF. Since last year, August, it has been coming down. That's why money coming out from bond market has pushed S&P even higher. We are seeing that already. Can you see that? I just want to say this. You cannot say, tonight bond market drop, then US stock market must go up. We are talking about trillions of dollars. Trillions of dollars cannot move within a night, ladies and gentlemen. It's a gradual process because trillion of dollars is being handled by a lot of fund manager or institution. They take time to move the money. You understand? So it's not, tonight US the bond market drop, US stock market go up. It doesn't work this way, ladies and gentlemen. But we can see the trend is the bond market is coming down. The money come out. Where did it go? It go to a US bull market, stock market. That's why pushing it higher. It's just that recently we have some correction. All right. This could be a lot of reason. One of it is the fear of the inflation, because they were saying, yeah, increase of interest rate is something bad for the so-called the stock market. But regardless what it is, we can have all sorts of reasons. But the true fact is this: there's a lot of money floating out there, and since money is going to move out from bond market because of the trouble in the bond market, it is going into private asset like what stock market. That's why I say we will still have melt up. The bear market is not over yet. We will still have a melt up in the US stock market. That's why I give my forecast Dow Zone 34, S&P 4,000, Nasdaq 15,000. We probably will have a melt up, probably a parabolic run, like what we see last year in something like the glove stock, or even since early end of last year, what happened to a cryptocurrency? They kind of melt up. Then finally, we see this bull market after 12 years finally end, and we'll go into a bear market probably in the second half of this year. All right. So hope that answered the question. So back to you, Shane.
All right. So there are several questions asking about your view on the Chinese stock market. Will it crash together with the US stock market?
Wait, my take is this. Since we talk about this, let's look at SSEC, Shanghai. You are looking at my price chart, right?
Yes.
Yeah. So let's look at Shanghai. Shanghai Stock Exchange Composite. Yes, yes, it has come down a bit as well. This blue color line is a 50-day moving average. Can you see? I mean, in short to intermediate term, can you see I can draw a support line, and it bouncing off this blue uptrending support line and the 50-day. So later on, after this correction is over, I expect China market to go higher. All right. Let me just zoom out a bit more. Let's say maybe 3 years. There's a saying for China, FIFO, first in, first out. They are the first to enter into COVID-19. They are also the first one who came out. Also, the thing to me is, if you look at this, technically, it came down. I mean, over here, it found support here, it goes up. Now it's finding another support. So after this correction over, that's why I say it will continue to go up. And then later on, when US went into a bear market, likewise, China will go into a bear market as well. But it will not be so bad like the US stock market. I like what I say, I specialize in cycle analysis. So there's actually a 510-year world dominant cycle. All signs are pointing to me that US is going to overtake, not US, China is going to overtake US as the world largest economy. And the global financial capital probably will go over to China, maybe Shanghai. All right. The year I'm looking at is around 2032. Also, this coming bear market, China will drop less. Whole world will drop. Like, in the beauty contest is to choose the most pretty girl, right? So in the bear market, this coming bear market, it is to choose the least ugly. That means the one that dropped the least, to me, is going to be China market. All right. So that's my view about the China market. All right. Back to you, Shane.
All right. There are also several questions on crypto asset.
Oh.
So Derick, what is your view on crypto, especially like Bitcoin? With like more and more companies such as Visa, MasterCard being involved, will crypto be another safe asset?
I just want to say this. A lot of people view crypto or Bitcoin like digital gold. For me, at this point of time, I do not treat cryptocurrency or even Bitcoin, even though Tesla bought into it, Square bought into it, all this strategy bought into it. I don't treat them like a store of values. A store of value to me cannot drop 20, 30, 50% one. If it's a store of value, how can it drop so much? You understand what I'm saying? So, but to me, cryptocurrency, they are just like any asset classes. Is good for trading. I can let you guys know. I myself have been trading Bitcoin and Ethereum. In fact, last year and I bought into Ethereum. Within 1 or 2 months, I doubled. So it's a very good trading instrument, I would say. That's why I say the crisis is in the public debt, the collapse in the confidence in the government. Money is going to shift out. Go to where? Go to US stock market, go to commodity, go to cryptocurrency, go to things that are private, not controlled by the government or the banks. That's why if you ask me, I say I'm positive about cryptocurrency. Or don't ask me whether can buy or not, or how much you'll go. I cannot mention this. I'm not here to advise you, but for my own money, I am in cryptocurrency. All right, and I do believe some of the money that flow out from the bond market is going to go into crypto and cause it to go higher. That's my view, but I will never treat cryptocurrency as a store of value, at least not now. For example, Bitcoin, probably the fourth halving, but not now. All right, that's my view about cryptocurrency. All right, back to you, Shane.
All right. There are also several questions asking about, the response. Like since you are doing a forecast that the market may crash in the second half of this year, so how should we position ourselves for this scenario?
Okay, so let's don't talk about the crash part first. Let's come back because we still have the melt up, remember? So after this correction is over, we can enjoy the melt up in the US stock market. And where, if you don't know where to go to, don't need to go far already, because you can open an account with Kanaga because Kanaga can trade US stocks. All right, so if you haven't have an account, please open with Kanaga, okay? We ride the melt up. Kanaga, we also can trade commodities using Kanaga platform. So just I mentioned about gold and silver, right? And the turning point probably is coming soon, right? There may be another opportunity. All right, so we are ride the commodity bull run, the melt up, probably until the second half of the year. When bear market come, what we can do is we can, in US market, we can do short selling by buying inverse ETF. I think there are also inverse ETF in Malaysia market. You all can go and do your homework. I don't want to mention any name, but there are ETF in Malaysia market that you can do short selling. It's an inverse ETF. We can then buy into all these inverse ETF to short probably the US indexes like Dow Jones or S&P. I would say there are more of these inverse ETF in the US market and is available in Kanaga platform. Also make use of Kanaga platform to help you ride the melt up as well as ride the trend down during bear market. If you need information, please look for professionals from Kanaga, their staff, or you can call in or ask the personnel from Kanaga to assist you guys. All right, so that's my answer, Shane.
All right. So the next question is asking about cyclical stock. Now, since Federal
About what?
Reserve
Sorry?
comment
About?
cyclical stocks.
Oh,
So
cyclical. Okay.
okay, now since Federal Reserve comment that they will not raise interest rate this year, So, and bonds are collapsing while bond yields is rising with inflation expectation. So the question is, should we expect cyclical stocks to perform well this year?
Actually, if you ask me, like what I mentioned earlier, Federal Reserve, they can say they won't increase interest rate. Later, probably second half of the year, they'll be forced to do so. So I think one of the sector we probably look at is those sector that's going to benefit favorably from the increased interest rate. So I don't know. I think one of the sector is actually financial, especially banks. Increase interest rate actually will improve their earning. But on the other hand, what are the sector that's going to impact from the increased interest rate? Or probably the utilities or even the REITs. Raising interest rate is going to impact them so-called negatively. Also, probably I may not be interested. Let's take a look. Don't need to go too far. Let's take a look. For example, there's a utility ETF. This is utility select sector SPDR fund in US market utility. Can you see it's coming down already? So that's why I say all this interest rate sensitive like utilities, telecom, all this, they probably will not fare well. But those that benefit from increased interest like financial, let's take a look. There's an ETF called XLF. Can you see it's been going up because of anticipation in the increased interest rate? Also, to play interest rate, I think I just shared already. So if you are in Malaysia or Singapore, you can take this sector outlook and then project into the individual stock in your own country. Probably you should look at your banks, or you should not be looking at utilities. Also, this is a direction I can point you to, but I cannot tell you what stock to buy. I cannot do that. I cannot give advice. All right, do take note. All right. So back to you, Shane.
All right. So, how do you see tech stocks going upward? Because just now you mentioned that Nasdaq is very vulnerable to
Yeah.
further crashes.
Just now I show you all right. The Nasdaq seems to be forming a head and shoulder. Let's go back. Let's go back to my slide. Oh, that's why there's a sector rotation. Right? Tech stock have been doing well. Also, probably all the fund manager institution, they're starting to take profit. You see Nasdaq? All right, left shoulder, head, right shoulder, break this probably 13,000 support. I think it's coming lower. But I just want to say this, if we break this support, it may come lower to maybe 12,100 to 12,500. But I don't think it's going to collapse. I still think it's going to bounce up, probably going up to challenge 15,000. That's my take. So I don't think it's going to collapse, but correction is coming, especially if this 13,000 cannot hold. I think it's coming down. So I cannot talk about any individual stocks, but whatever it is, because we are riding into the last leg of this bull market, my take is this: don't try to how should I say, bottom fish, or try to buy stock at a cheap. We are at the tail end of the bull market already. What I will do is I'm going to buy stock that's breaking high and sell higher. I'm riding on this melt up, on this momentum to make my money. Now, to me, it's not the best time to do value investing, unfortunately. Value investing, to me, the best time to me, to me is probably 2009. That was the best time to do value investing. And to me now is not a good time to buy and hold because the bear market is coming in. unless you believe that this bull market is going to continue into 2023, 24, 25, 20, 30, then you buy and hold. But seriously, if we look at this, I think after this bull is over, is coming down, we'll be going into this bear market. And I have a feeling because this time around it has really gone up a lot for a long time. This time around, the previous bear market was about a 50% collapse. I'm expecting this time around to be deeper than 50%. Or it could be 60%, maybe two-thirds. Or all this. And because it's deeper, that's why, ladies and gentlemen, learning how to do short sell is important. All right. One way is by buying to inverse ETF, which is available in Kanaga platform. But don't worry, don't worry. As long as the RI doesn't break below this red color line and we do not have a 20% drop, then we are not going to have a bear market yet. But do take note, my RI is coming down already. It's coming down. Has been declining for the last almost half a year already. Don't worry, I'll be back again. I think it's the second half of this year. Maybe then I'll be able to show you where is my RI then. All right?
Yeah.
Okay?
Stay tuned on our updates. We'll let you know when Derick is coming back for his second sessions. Okay, let's do one more question from YouTube. Let me see the name. Okay, this is okay, suddenly I lost track of the name. Okay, so Qian is asking about US dollar index DXY. So what is your view on this?
I've been waiting for this. Actually, I leave it. I see whether anyone will ask or not. Finally, someone asked. So I'll just share. To answer this question, let me. This is my cycle chart for US dollar. All right, US dollar. So I see there's a turning point, probably around early May. I'll just remember there's a turning point probably around early May. When I project this cycle information onto US dollar index, let's take a look. Here we are. Again, in case you all didn't see, is early May. Can you all see? This 1st May to 1st June. So this is early May. So with this information, this US dollar index, sorry, not US, this is US dollar index. So I do see that this is what I see. The turning point, remember, is probably early May. So there's a resistance here around 91.50. So I'm expecting the US dollar index to challenge this resistance here. Once it can clear this, probably it will go higher. Then you'll make a resistance around the 200-day moving average around here. All right, until the next turning point probably is early May. That's what I see. In the short to intermediate term, I'm bullish on the US dollar until early May. Provided this resistance over here can be broken, then we will see it go higher. Probably challenge this 200-day moving average. All right, but a lot of people thought over here, it's going to break down and go lower. Can you see? It suddenly has a reversal, very interestingly. All right, and let's see whether it can break this, which is about how much? Wait, I see. 91.61. Once it can clear 91.61, probably it will hit a bit higher or towards here. But the next turning point is probably around early May. Oh, that's where I see. All right. Back to you, Shane.
All right, great. So I think we have our Q&A session is coming to an end. Of course, there are just so many questions that we that you asked in the comment section. So we really appreciate your overwhelming response in the Q&A sessions and also your engaging response in the Q&A session. So Derick, do you have anything to add on your
Yeah.
end?
Okay. Can probably let me just share a few more slides before we conclude tonight's webinar. Before I go on, just to check, have you all benefited from my session? If yes, can you just key into the chat box? You just key in Y or yes, so that at least I know you all have benefited. Yes, good, good, good. So I hope you all have a better understanding what is to expect coming. All right. So let me just quickly share uh, what I have. So I've specially prepared an ebook. I know some of you guys still think, oh, how high? Why I think Dow Jones is going to go up to 34,000. All right, so I've actually prepared an ebook. How high will Dow Jones rally before this US aging bull market is finally over? This is the latest uh, 2021 edition. Also, for those who are interested to download this free book, is free one. Please take out your handphone and scan this QR code. Or please take out a handphone and scan this QR code. Then you can download my free book to understand why I think Dow Jones is going to hit a target around 34,000 before this US bull market is over. All right. Also, please take your handphone and scan this QR code. Then just now I saw, so you all still have a lot of other questions. I can't possibly answer everything, but don't worry. I do have my own webinars. Also, you guys can actually attend my other webinars. All right. For those who are interested to understand more than what I shared tonight, you can scan this QR code. You can attend my other webinars to understand more about how I look at the market, how I analyze the market, or using TA, especially CA, which give me more advantage, I would say, over a lot of traders or investors out there who only make use of TA and FA. All right. So if you want to attend my other webinars, you can scan this QR code and register for it. Also, I think with that, ladies and gentlemen, I think I've shared enough, and I'll just like to conclude with this. Don't worry, I think we are still not going to a bear market yet. We probably still have a melt up. Let's enjoy this melt up. Please remember to use Kanaga platform, all right? And then ride on the commodity bull run, all right? Then probably maybe second of the year, I'll be back again with Kanaga webinar. I will show you my RI and my cycle chart again. All right, let's enjoy this bull run first. But we will first have a correction first. All right, okay. So with that, ladies and gentlemen, may the timing be with all of us. All right, thank you. All right, thank you very much.
Thank you so much, Derick. So let me present on my end. Just give me a minute. All right. So let me tell you when is our Kenanga next webinar. So the next Kenanga webinar is going to be a live chat with P-Trans, which is Para Transit Berhad. So where we are going to review the Q4 results of P-Trans and also their outlook. So this time we heard you, and then we are inviting the management of a listed company, which is P-Trans, to come and share view their result and also tell you how the future is like for them. So you'll hear from the management himself. We are invited the executive director and also the chief financial officer from P-Trans to share with you their Q4 result as well as their futures outlook. All right, so it's happening on the 9th of March 2021, which is next Tuesday, 8 o'clock to 9:30. Okay, remember it is 8 o'clock because usually we do it at 8:30, but for the session with Para Transit Berhad, we are doing it at 8 o'clock. Okay, so the registration link are just given to you on the Zoom chat group, and also written there on a YouTube live chat. So if you want to hear from the management of the P-Trans about their outlook and also their result and their latest corporate development, see whether there's any investing opportunity or not, please come on board to our webinar next Tuesday. Okay, brought to you by Kenanga Investment Bank. So for those of you who have not had an account with Kenanga, kindly fill up an online form if you want to open a Kenanga account. The online form was just given to you on the Zoom chat group and also the YouTube live chat. So you can fill in the form, and Kenanga Investment Bank will arrange a friendly dealer representative to attend to your request. All right. So with that, thank you so much, Derick, for joining our webinar today and sharing your insight and perspective on how different market will work and your forecast, be it in the stock market, to the bond market, to the equity market, and even to the crypto market. All right. So
All
thank
right.
you so much, and we
Thank you,
really enjoy
Shane.
your company.
Okay.
All right. So for all of you here, thank you so much for joining. So have a pleasant rest of the day. Bye, and see you
Thank you.
on next
Bye-bye.
Tuesday. Bye, everybody.